Holiday sales rose 3.8% over last year. For November 1st through Christmas Eve, our next guest sees some clear winners, and he joins us on set with his picks now. Simeon Siegel is managing director and senior retail analyst at BMO Capital Markets. You have winners and some losers that you think could be winners. But first, let me ask you about the 3.8. How do you think about that? Is that a great number, good number, okay number, bad number?
So I've been enjoying this kind of Grinch Santa thing going on here. Like, by the way, Kelly, around the holiday season, not as easy to please here. 3.8 to most people would be great.
Is it?
But here's the thing. You and I should care about inflation in a good way, not in a bad way. Because in a good way, we call it full price selling. And so in discretionary retail, if you're charging more money, generally that comes with higher margin. So we think about inflation as being a cost element.
No, I wanted it to be 7%.
I know you wanted it to be, and then double digits,
I felt, okay,
and then
4%
even better.
real, 3% inflation, and then Steve said, well, actually, inflation might be a minus 0.1.
I'm looking it up now, by the way, goods inflation, so you can keep talking.
And so here's the point. I think, first of all, goods inflation, we should split apart between discretionary and staples.
True.
So if your milk is higher, then you're buying less units. If your sweater costs more, you're probably getting better margin for the company.
In other words, a lot of people don't realize, because needs inflation has still been so high in the goods area, that actually discretionary inflation has been. And actually, it's so funny. If in my head I thought 4% would be a good number, and deflation ends up being 0.2, then it will literally come out to 4%.
You'll get your number.
Yeah.
And so that's one.
Minus 0.6.
There you go.
Interesting.
Minus 0.6.
And so I think
add 0.6 to 3.8.
Right, so 4.4.
So you're hitting your number.
And by the way, retailers don't care. They just raise their price with inflation, and then the question is margin.
Well, by the way, so listen, you're the economist. You know this a lot more than I do, so I'm probably wrong, but I will tweak around that a little bit. Retailers don't raise their price with inflation. The price retailers set is what creates inflation. Inflation is just the amount that we spend. And so if there's full price, if all of a sudden Lulu can charge 20% more, then on Lulu goods, there was 20% inflation. It's a scary thing when we talk about it in economist term, but in retailer term, that means higher.
It sounds like they actually did okay. Is that right? Lulu all of a sudden has kind of come back, and it's been a surprise this year.
So I saw your earlier guest call that out. I think what's important to flag is Lulu's U.S. sales were flat. And so that's great, because Lulu does a big business, but it's not greater than it was supposed to be. And so I think that, and this goes.
Has the stock been on a turnaround lately too?
Well, because it also went down.
Yeah.
And so that's what in terms of the winners and losers. So if we think about the stocks, I think the other thing to keep in mind with 3.8 is not only inflation versus not, it's also an average number. And so what that means is, I guarantee you Hoka and On are seeing dramatically better than 3.8.
Of course.
And Under Armour, Nike, Michael Kors, other businesses are seeing dramatically worse. And that's actually really good. Because during COVID, we got so trained to look for, a rising tide's going to lift everyone. And so 3.8 means everyone's up 3.8.
How were the discounts? Like, that's the big fear for a lot of retail analysts is, we cleared the merchandise, but, at what cost?
So for the companies that need them, they were there, and they were worse. And that means the business is going to be worse.